Andy, when you look at gold and silver, there's a lot of people that have been asking me, when is the time to start moving from silver into gold? Typically when we see a gold to silver ratio over 80, and we've seen it in the 90s, we've seen it even above 100. It's a better time to be buying silver. It's a time where you can trade your gold into silver. And I'm starting to hear from some people that at 70, they're looking to start moving their silver into gold. Is that too early, or is that something that you recommend starting to do with portions of it if you're heavy in silver?
Way too early. Way too early. You shouldn't even think about it until it's
StackingSurfer. I think I'm your best friend. Balances in your bank and stack. What's up, everybody? I'm Jared, the StackingSurfer, and I've got with me today Andy Schectman from Miles Franklin. He is the CEO and owner, and we've had him on many times on the show. It's been a little while since we've had you on, Andy, but I'm glad to have you back on.
Yeah, that's good to be here, man. I hope you had a good Thanksgiving. I'm sorry. I've been literally the entire month of October and half of November. I've been on the road traveling with obligations, but it's good to come back and settle down a little bit, and good to be here. Appreciate you having me.
That's awesome. Well, yeah, Thanksgiving I think is always a great time. It's always good to be with family, and this Thanksgiving has kind of felt like the last couple for me. I get all anticipating for, and excited for Black Friday. And it turns out that Black Friday ends up being a pretty high day for precious metals. I don't know if you've noticed the last couple of years.
Well, I think it could have been even a higher day this year had the CME group not shut down for 12 hours in the middle of the night, Friday till Friday morning, claiming a overheating server, if you will, for the metals markets. Yet it's about you're talking the middle of the night. There's no volume going through the CME group or the COMEX. And you want to talk conspiracy theories. Yeah. So it's the only group that was shut down. Everything else was working just fine. And these server farms in Illinois, this one are built with double and triple redundancy. One air conditioner goes out, there's another two to back it up. But they said the CME precious metal server overheated, and that was, Friday was the day that the December contract went off the board. Delivery request. There was a massive delivery, something like $400 million worth of silver that stood for delivery and wouldn't take cash settlement. You have short positions. You have silver breaking out in Asia that night as it popped above $54, and the CME just happens to have a cooling failure in their servers for precious metals, but nothing else, not Forex, not interest rates, not equities, just in precious metals for 12 hours until it came back on. We're right at that level where things are starting to break because of delivery requests that used to be papered over and no one ever stood for delivery. That's not the case anymore. And so being naked short to a massive level like some of these idiots are, is creating a very big problem. We saw it earlier in the year with the LBMA in London, where they said, no, it's not T plus 1 day, meaning trade plus 1 day the next day. The third day, the bars that you own should be moving your way or into your account. No, it's T plus 8 weeks. We're sorry, Jared, because there's a backup, a shortage of manpower and trucks in London. The Bank of England can't get enough in the way of trucks. So it's T plus 8 weeks for those bars that you were anticipating in 3 days. We're sorry about that. We're seeing that happen, and now it's happening here, right as the United States government makes silver a critical mineral, reclassifying a critical mineral, putting a floor underneath it, a policy and national security floor, right as it's breaking out across the globe, breaking through its 45-year cup and handle, breaking through all resistance, breaking through price levels in China before it opens in the United States. And although everything you can think of screams of Fugazi. So, yeah, I think it will only go higher from here. Not straight up, but ultimately up.
I think you're right. What's interesting, too, is just in the last day, we've seen some pressure coming on to silver and gold. Maybe there's a little bit of profit taking. Maybe there's some additional shorts that are coming on. But then today we started to see it swing back up for silver. It seems like it's really hard for them to keep it down, even if they want to.
Yeah, well, that's physical demand overwhelming the paper shenanigans. With silver, it could be short covering, where they knock it down coming into New York. It was down almost $1, and then bang, it comes right back up after they cover their positions. Who knows what it is that does it? But nonetheless, you're right. In years past, that they would step on its neck and then cripple it. It wouldn't come back. Now it does, whether it be right away, like we saw today, or over a period of days. When silver went up for 9 straight weeks, no one complained. And then for a week or two, it got beat up. It fell below 50. Everyone said it's over. It's never going to sell your silver. Sell it. It's a joke. And it goes right back up to 58. The market wants to take as few people along for the ride as possible, Jared. And I think that you have to have strong fingertips sometimes. That's why so few people succeed in investing. That's why there's a whole school of investing ideology called wave theory, Kondratiev and Elliott wave, that speak to human emotions drive the markets. And people got very emotional when the market moved down over a period of a week or two, but not a word out of them and when it went up for 9 straight weeks. So emotions can get the better of people.
I think that's true. So a couple things that are coming up, Andy. We do have the Fed meeting, and there's been a lot of talk previously, if you go back a few months, that for sure there's going to be a 25 basis cut, 25 basis point cut, or a quarter point reduction in the Fed's fund rate. And then all of a sudden that kind of got quashed in October, end of October, kind of beginning of November, where people started thinking, okay, maybe that's not going to happen. Now that we're hitting December, those odds are starting to go back up, where people are starting to believe we're going to probably get that. Do you have any take on what may happen with interest rates in December from the Fed? And, how do you think that's going to affect gold and silver prices?
I think they have but no choice to continue to do it. The problems in the repo market, the problems with the labor market, they have no choice. They'll lower rates again. And if you think about it, they're at the best they've gotten is 50% away from their target. That's not real accurate when you're 50% away. So trying to throw a ball 100 yards, you make it to the 50-yard line. Not going to work probably for your Hail Mary. Not to say anyone can throw it 100 yards, but you got my point. And so, and not yet they're giving into inflation. They're giving up on inflation, giving into the economy at a period of time when they're not even 50% away from their target. And the measurement that they use is all messed up. The the CPI issued by the the BLS, where they exclude food, energy, and housing and continually pull things out that are inflating, like coffee, and substitute it with tea, because surely no one would buy coffee if the price was going that high. These are the types of hedonics that they use to fit their inflationary agenda. The real level of inflation is 11%, according to Shadow Stats, which just measures it based upon the way it used to be under previous administrations like Carter and Reagan before it was completely changed. And so, inflation is much higher than we're told, and they're going to give into it through lowering rates, through quantitative easing, through the reduction or end of quantitative tightening. They won't continue to sell assets off their balance sheet. It's not good. And you can expect a weakening dollar. They say the dollar is only down 9% this year against a basket of crap currencies, that being the dollar index. But look at it against gold or silver or platinum.
Yep.
It's down 70+% against platinum and gold, and almost 100% against silver. So what is the reality? Is the dollar down 10% or 80 or 90%? It's down against gold, silver, and platinum. Real measuring sticks, I would say gold being the best, almost 75% this year. Look at it last year. The 10-year treasury was up 4%. Gold was up 45%. Why would anyone hold our treasuries? Why would anybody? It's doubled the performance, that being the gold, over the 10-year treasury for the last 25 years. Why would anyone hold any duration financial instrument of the U.S. government when we are as fiscally irresponsible as we are, and have signaled to the world, screw austerity. We're just going to print. Where in the 6 weeks we were shut down, we added $600 billion to the debt. In seconds, 20,000+ years ago. So, I don't know. I think that they, at this point, realize that it'll be a bigger problem if you see massive layoffs, because the system is just gummed up. And so they're going to give in, and I think they'll lower rates.
I think you're right. I've been kind of in the camp that they're probably going to keep doing it. Just from the fact that they, as you said, they're kind of masking things, right? They don't really want the banking industry doesn't want to see it. The government doesn't want to see silver going super high, super fast, because it shows and wakes too many people up, and it shows that there's too many things going on. And so they kind of do these things little by little, like you've described, until something breaks, and it all happens at one time. So I think, bringing the rates down a little bit is going to help. If they brought it down significantly, it would indicate that there's something systemically broken with the system today and with the economy. If they hold them steady, they run the risk of banks starting to, to basically falter and fall apart. And if they don't start quantitative easing at some point in the near future here, they may get that all at once moment happen when they're not looking. So I see a lot of that's going on in the markets too. So, Andy, when you look at gold and silver, there's a lot of people that have been asking me, when is the time to start moving from silver into gold? Typically when we see a gold to silver ratio over 80, and we've seen it in the 90s, we've seen it even above 100. It's a better time to be buying silver. It's a time where you can trade your gold into silver. And I'm starting to hear from some people that at 70, they're looking to start moving their silver into gold. Is that too early, or is that something that you recommend starting to do with portions of it if you're heavy in silver?
Way too early. Way too early. You shouldn't even think about it until it's 50 to 1, in my opinion. It's coming out of the ground at 7 to 1. It's averaged about 45 to 1 for the last 100 years, price-wise, and that was with a 16 to 1 geologic ratio. Now it's 7 to 1. It's disappearing, and the demand for it is out of control, with the U.S. government just classifying it a critical mineral. China doing the same thing, and massively reducing exports. I would say to you that is definitely not the time to do it. Definitely not.
So when someone's looking at that, do you have kind of a rule of thumb as far as when you look at ratios, looking at 50 being the middle, right, being the average? Do you have any thoughts as far as allocation percentages based on some of those numbers to help people that might be looking at it right now? Maybe they got into the game when it was at 100 and now it's getting close to 70. Would there be anything different that you might recommend they take a look at in the portfolio?
No. For 5,000 years, the geologic and price ratio was 16 to 1. Go back to the Romans, it was 12 to 1. It's been 16 to 1. And Sir Isaac Newton figured out the amount of gold and silver for the currency, the UK, I don't know how many hundreds of years ago, 16 to 1. Now the geologic ratio, because silver is found in nature in a form called epithermal, like your skin is epidermis right near the surface, the big deposits have been exploited a long time ago. And so the geologic ratio is 7 to 1. Man's ratio, because of gold's role as money and silver in industry and suppression through the military industrial complex, whatever way you want to look at it, which is undebatable as far as I'm concerned, but has been roughly 45 to 1. The further away you get from historical averages, the greater the magneticism that pulls you back. I live in Delray Beach, Florida, on a golf course. If I spent 50 years in Minnesota. I have two snowmobiles in my sister's garage in Minnesota. I used to love to go snowmobiling every year, and I still do, but haven't gone for a few years. If I woke up to 4 feet of snow on the first tee box here, I wouldn't call my sister and say, ship me my snowmobiles, because I would know it's an anomaly. Now, price anomalies can stay irrational longer than you can stay solvent. That's an old market truism. But anomalies typically do resolve. Mother Nature gets her way. And this one will too. It just is taking longer. But if you realize it comes out of the ground at 7 to 1 and it's averaged roughly 45 to 1, then why wait? Why not wait until it gets to that point? You're talking, 50% less than you could otherwise get if it just gets to its average. And just getting to its average is a double. And that average is almost 150 years long, and it would still be 6 times higher than it's coming out of the ground at 7-1.
I'd agree with you. I'm not planning on doing that for a long time until it gets a lot lower. And I'm not one of those people that believes it'll never happen again. I know there's a lot of people that have been, that bought silver maybe at the top of the 1980, run up with the Hunt brothers. And some of them are just so excited to be seeing 50 and being able to sell out of it, not realizing how much inflation we've had and that the $50 price mark for silver is nowhere near what they paid for it as far as value goes back in 1980. So there's some people that are kind of freaking out over that. But for the most part, I think most people are starting to understand that silver has a lot more ways to go. We're just getting started in this silver bull run. I kind of look at it like we're in the first inning. Maybe we've even got the first batter up. Gold might be in the second inning because it started a little bit earlier last year.
I think that's fair assessment. And typically that's how it moves. Gold goes first, silver goes further percentage-wise after it lags behind and then catches up and passes it on a percentage basis.
And that's kind of what I'm seeing now. And to me, it looks like we very well could see $60 silver even this week. And it looks very plausible by the end of the year.
Yeah.
Silver's been beating a lot of other investments that you could go out. I think just about all of them out there. Crypto's been pulling back a bit. I'm even starting to see some crypto people that maybe were, talking a lot of trash about silver and gold, starting to consider buying some of it.
That's why I've always tried to bring the two communities together, Jared. I've always tried. I speak at the XRP convention and go on shows like Black Swan. I'm going on Thursday. Versan and Vandel. I've been on several of the XRP shows and speak at the conference. And I've had Natalie Burnell on my show twice. I've been on Mark Moss's show, and he's been on mine. And, these are Bitcoin maxis that have done very well and are very smart. My idea, it's not that I'm a Bitcoin person. I'm really not. But I think that it's stupid for the two communities to be adversarial rather than complementary. It's like a Reese's Pieces or a Reese's Peanut Butter Cup. You go better together. I think that they walk into the same door for the same reason: the dysfunction of the currency, the lack of or a decentralized platform, fiscal and monetary irresponsibility. Great. Bitcoiners take one turn to make profit, and the gold people go the other, largely to preserve. Yeah, they want a profit, but why not take some of your winnings and move it over to gold and balance out your position and be complementary with one another, because it makes your understanding of economics, macroeconomics in general, geopolitical, it makes your understanding of the whole ecosystem stronger and better. And really, it's the same understanding. It's just one is about profit and the other is about savings. So take that profit, put it in the old school savings, and leave the casino with money in your pocket no matter what.
I think it's very sound, and I think it's a great strategy because, to your point, most people that are in cryptocurrencies and those people that are in precious metals both want to get out of the fiat system. They don't trust it. They don't like how much debasement's going on in the US dollar. I think they can see the writing on the wall. They can see that inflation, and they can feel it. It's way higher than what they're telling us through the CPI. And the bummer of that too is anybody that has a W-2 income, that has a company that might increase their pay based on, the CPI, which is pretty standard, they're only going to get a small increase below 3% going into next year, when it's, like you said, most likely at least 11%.
Now, here's something crazy. When I had Judy Shelton on my show, who was Trump's nominee to run the Fed, I said to her, I just got to ask you a question. Whose stupid idea was it to strive for 2% inflation? Because in general, wouldn't stable prices or even negative inflation denote a higher standard of living? And she said it was Janet Yellen's husband, who was an economist at the time, who said, if we have stable prices and no inflation, then it will be very difficult for business owners to give their employees a raise. They'll end up taking away from the profits of the business and they'll go backwards. But if we strive for 2% inflation and business owners give a 1% raise each year, Well, the employees will feel as though they're getting ahead, but actually they're going backwards. Don't tell anyone. She said that to me. I almost threw up thinking, man, these people are just gross. Not Judy. She's awesome. But the people that make the rules, that set the rules, that know how to jerry-rig the system, just makes you think a little bit about inflation and why they work so hard to keep it masked from us. Because even the TIPS, the Treasury inflation protected bonds, well, they're basing it off of a measurement that is flawed. Everything, the cost of living adjustments in Social Security and all of these things are much less if you lie about the inflation. So just a little interesting tidbit.
It is. And I think people are starting to feel that and wake up a little bit more. So I had a couple other questions for you, Andy. One goes back to a statement you made a little while ago about U.S. Treasuries. Why would anybody put their money in there? And one of the things I've noticed is we're seeing a lot of the billionaires starting to sell and divest themselves to a degree out of their own company stock. And they're doing it, to the tunes of billions of dollars. We don't know where all of that's going. I would be surprised if some of it's not going into gold and silver. But you get people even like Warren Buffett that don't really talk highly about gold and silver. He has, in the past, done a trade in silver and did pretty well with it, but it was short-lived. And right now, I think he's I want to say it's like $250 billion or so.
It's almost double that. I think it's 400 billion.
Like 400 billion. So it's huge. A lot of money that's sitting in U.S. Treasuries. Now, I know with Warren Buffett, one of the reasons he doesn't like gold and silver is he really is more into businesses that produce cash flow that are productive. He doesn't see these being super productive. I know he also has talked, or at least Charlie Munger, his former partner, was always talking about cryptos as being rat poison and something he didn't really like. But do you see Warren Buffett potentially going into the gold and silver market and using some of those funds to buy in? Or do you think he's got another strategy altogether?
I really don't know what he thinks. I mean, he's a very old man. I think he's thinking about his legacy more than anything. I wouldn't be surprised if he owns a good bunch of it himself, just says the opposite. The fact that he is in cash the way that he is, the fact that gold is up 70% and the S&P is up 16% amidst the greatest tech boom in history with the AI, and the insiders are selling $2 billion a week since June. It's not just Buffett. You got Bezos sold $7 billion in Amazon. You got insiders and board members of NVIDIA dumping a couple billion in stocks. You got Zuckerberg dumping, Jamie Dimon dumping, and the institutionals dumping as the public is all in on stocks. The largest allocation to stocks they've ever had, 45% or so of the market is by retail investors. The largest exposure to options, which is speculation, and the largest exposure to margin debt, which is leverage, at all time, $1.5 trillion in margin debt, as the insiders are selling. And who the hell is buying billions and billions and billions and billions worth of gold and silver since November? Every month, we're net importers of gold for the first time in my career, and other than brief episodes, maybe ever. So who's buying all this gold? People at that level don't do things just for the hell of it. They know what's coming. At the same time, they're quietly exiting the equity markets as the public's all in. So I would say whether or not Warren owns it, I think it is being accumulated by the most well-funded and well-informed traders in the world. And you can see that not only by the bleeding down of metals out of the LBMA, the massive deliveries way out of the ordinary every single month here on COMEX. Again, just the first 2 days of the COMEX contract, the December delivery, and I didn't see yesterday, which had been the third day. You're talking, I don't know, 15, 8. Well, let me give you the exact numbers, but billions and billions. So far, just in the first 2 days of the December contract, but this has been like this every single month. The first 2 days of the December contract, because it's important, it speaks to the biggest money in the world. Okay, day one, December silver contract, 7,330 contracts stood for delivery. That's 36.65 million ounces. worth more than $2 billion. Not a record. April saw 11,692. And as mentioned further up in the daily delivery report, we're only into day 2 of the December deliveries, and there's already been 2.397 million ounces of gold delivered, plus a knee wobbling 41.525 million ounces of silver issued and stopped. Those are in 2 days. You know, you're talking billions of dollars worth of gold and silver every single month. Who the hell's doing it? That's the insiders, who are the most well-informed, the same ones that are leaving the equity market. You wonder if Warren is in there? Probably is, through some sort of a fund or whatnot. And when you buy stuff on the CME, there's no disclosure. If you're a massive bank, you have the COT report, Commitment of Traders, which shows the positioning of the biggest banks. You can see and figure out probably who bought, who sold. But, you know, the biggest money in the world are draining the exchanges and standing for delivery, as the public is doing the opposite.
And I think that's a really important thing for people that are watching this today, at least for me, a message that I want people to understand and take home. You know, when smart money oftentimes becomes a contrarian, you know, vote with the money. They'll often look and see what's going on. When things start to get really frothy, you know, they've already been out, right? And so it's funny. I saw a post the other day. There's a friend sent me a YouTube video, and it's a CPA guy that has like 1 million subscribers. So he's got a big channel, and he was talking about silver may be at the top right now. And the reason he was talking about that is he said, I was starting to hear it from, you know, a bunch of people over Thanksgiving, family members that were saying, hey, should I buy silver? Is it time to get in now? And I would argue we're nowhere near close to a top at all. And he just happens to have some family members that are asking that question. But, you know, the old saying goes back in 1929, you had your shoe shiner that was giving you stock tips. And when that was happening, you knew that the market was kind of at the top. We're really nowhere near there.
No, these are just the people who are listening to a guy like you or me, or a friend of theirs, and has been saying, you know, you should really buy silver, and they think about it forever, and then they just ask her, do you think I should really? These people will never buy it. The people who do it just do it because they know they need to do it, and they trust their gut. You know, and I think this is why there's so few winners in investing. This is why there's wave theory, Condrati and Elliott wave, which is human emotions. The people like that will buy at the very top after everyone's bought in well before, because the fear takes over and the FOMO takes over, and they'll be the first ones to sell it when it collapses. So, you know, to me, that doesn't signal a top. Far from it. In the respect, I own one of the largest retail companies in America, and I can tell you that the public has barely got their pinky toe in the water. We've seen massive purchases by bigger investors this year than I would have ever expected, but not the volume that we saw during Silver Squeeze in 2021, where, you know, we were doing 400 orders a day that were, you know, just a few $1,000s each or whatever. Now we might do half that volume, but the average order size is north of $60,000, $70,000, $80,000 or more. We work with every size client, don't get me wrong, but I think there are some wealthier, maybe slightly more, and I don't want to say sophisticated because that's not fair, but there are people who are paying closer attention to keeping their money, are realizing that maybe the fact that my advisors, who learn more and more about less and less till they know everything about nothing, and think that the only way to do this is stocks, bonds, and mutual funds, maybe there's another path. And I've been hearing about this gold and silver, you know, and they do something about it. The difference between those who succeed and those who don't are those that have the conviction in their own beliefs to act upon it. Most people go through life and say, shit, I knew I should have done that. Damn it, I knew it. Should have listened to the Silver Surfer all those years ago. He kept saying, why didn't I listen? That's the way people act. That's why, you know, people are always remorseful when they look back on their life, whether it be about business decisions or relationships. I knew I should have done that. Why didn't I do it? Because very few trust their gut. Very few have the courage to do it. Very few break free from the herd. It's much more cozy and comfy when the herd is saying, yeah, we're all good here. versus you're an idiot. Why would you do that? Well, you know what? Those analysts, they've been dead wrong, and they wouldn't ever admit it. Those stupid analysts who laugh at us, but gold has outperformed everything for the last 25 years, maybe with the exception of Bitcoin. And it's destroying the 10-year treasury in the S&P over the last several years, literally, and not a word, and so no, we're nowhere near, I think. All that's been driving it are the most well-funded, well-informed, and most sophisticated investors in the world. The central banks, the commercial banks, and now the biggest money here in North America, who is standing for delivery at a level so unusual, it's 4 feet of snow in Delray Beach, where I live, in July. I'm not going to get my snowmobiles because I know it's an anomaly, but that's how unusual it is, the whole environment. And so, yeah, I would just simply say, take it with a grain of salt if you want. I own a company, but I don't do that. I speak honestly and candidly. I've done too many of these podcasts. I'm too well known to bullshit people and lie and destroy my company and family name. I have no need to do that, no interest to do that. I would much rather speak candidly and from the vest. And I do think we haven't begun to see the retail public enter this market, not even close. And that's how the insiders want it. Now, you look at the shiny object over there. Well, we pickpocket at value the world's commodities because that is where we're going. And they know that and knew it long before we did.
I agree. And it's so Eric Yeung,
who's awesome, by the way. He's been on my show, and everyone should check him out on Twitter. King Kong something. I forgot the numbers.
No, okay, so it's King Kong at King Kong 9888.
Yeah. So 8s are very lucky in China. That's why he did that.
And anyway, he's awesome. I've had him on a few times too, Andy. And it was about 2.5, 3 months ago. He had a post, and it was from someone in China. And the post was these average families taking their life savings and buying these, I don't know, they're huge. They're like 15-kilo bars. So they're very heavy.
Yep.
And they're like 4.9 fine silver. It's what they trade over there. Here I prefer coins in the United States, especially U.S. minted coins are kind of my go-to. But something clicked in my head when I saw that post, and I can't remember exactly what was on there. But what changed for me is it wasn't about trying to chase a price and try to buy silver or gold below a certain price. What clicked in my head was accumulation. It's more about getting ounces than it is necessarily what I pay for it. Now, of course, everybody wants a good deal, and you don't want to buy at the local top. But what I started to see there is really, for me, it's much more about accumulating to get to a certain goal of a number of ounces for gold and silver to be able to protect my family. And I think, to your point earlier, financial advisors and planners, which we are not, so you guys, should be advising with other people as well. But we are pretty knowledgeable in what's going on with gold and silver, especially Andy. He's been in this game a lot longer than I have. But when you look at people that are making money just off of selling you stocks and bonds and mutual funds and ETFs, you need to stand back a little bit and maybe even have someone that doesn't get paid from that method to look at some of the research you guys are coming up with, what we're sharing, to kind of clear your head on it. And one of the reasons for that is I think what's going on in the market today, especially in equities, is it's a lot of trying to keep up with inflation. It's trying to beat out this inflation that's come up. What's not being looked at is how high PE ratios are historically. What's not looked at is a lot of the charts look very similar to 1929, which is not what you want. And so I'm not saying everything's going to crash tomorrow. I don't have a crystal ball for any of that. But what I do believe for myself is gold and silver is a very safe haven place to be, especially if something like that were to happen. And for me, I'm wanting to start to protect that wealth. But I'm also realizing that we're starting into this, this gold and silver bull run to where this will be one of those times in history where it's not just protecting, it's not just insurance that gold is and silver, but it's actually an ability to outpace the markets. And anybody that says that gold and silver at least gold has not outpaced the market for, let's say, 25 years, they're picking dates. They're picking dates for specific things. They're not looking at that entire 25-year run. But if you had been in there, if I had just bought gold in 2000 and just put it in a vault and went on with my business, I would have 10 times the wealth I have today.
Yep.
And
At least it was $252 around that time. So it's actually 20 times, almost 20 times the wealth. And you can take any asset you can think of. Take a house price in 2000 or 2005, pick your number, and look at the number of ounces of gold. In 2005, price of a house was about $280,000 and gold was like 445. So if you take that math, I just did this on an earlier podcast. 445,000 was the average price of, or excuse me, 245,000 was. You can do this right now yourself. 245,000 or thereabouts was the average price in 2005. Gold was 445. So that means you get 504 ounces of gold or thereabouts. It was somewhere in that number. Today the house is 460 or 470. It's doubled in dollar terms. Those 504 ounces are worth $2.15 million. It buys you 5 houses today. It earns nothing. And when you talk about the advisors who don't acquiesce, you're right. None of them ever did, maybe 5%. But Michael Hartnett, the chief analyst at Bank of America, says put 25% of your assets in gold. He's saying 25 stock, 25 bonds, 25 short-term treasuries, 25% gold. His newsletter is north of 10 grand a year. It goes to the institutionals. Look at the chief analyst for Morgan Stanley, the chief analyst, the CIO, chief investment officer, rather. He says sell half your bonds, put 20% of it in gold. The 60-40 rule that they've always used, he says, no, that's obsolete. 60-20-20. 60 stock, 20 bonds, 20 gold. Or Jeffrey Gundlach, the bond king, who's made his living selling bonds, paying interest, the antithesis of gold, says 25% gold is not overweight. So you do have acquiescence at the highest level. They're speaking to the institutionals, not to the plebes like you and me. And the institutionals are the ones bringing in billions every single month, billions and billions and billions every month, and have been for a year now, since November, since he won the election, Trump. I think these people are showing you with their actions, and some of them at the highest level are telling you with their actions. I had to tell my Morgan Stanley broker, who's a very good friend of mine, and he is one of the biggest in the country. He runs $4 billion in money management. He's one of the biggest in the state of Florida, one of the biggest nationally. And I had to tell him that their chief investment officer just said, sell half your bonds and buy gold. He said, what? So this is a guy that's one of the head honchos in terms of financial advisors in the country. Didn't have any idea that their chief investment officer just said 60-20-20, but the people she's talking to know exactly what she's talking about. These are the people even above a guy like this who's making millions of dollars every year, managing billions of dollars every year. So, it's true. He's a very good friend of mine. And in fact, his brother-in-law is Kevin, who works for me. And so, this is a very sophisticated dude who they don't see it. And they've grown up in an industry where the road to retirement is paved with stock certificates and mutual funds and bonds. Not the case anymore. And you have very sophisticated analysts and chief investment officers and bond kings saying so. It's just beginning.
I agree. And a lot of times if they're going to recommend it, they're looking at, the ETFs, and that's what they're going to throw people into. They usually don't even touch mining stocks really.
But SLV and GLD would have a 40 or 50 basis management fee.
Yep.
Basis point management fee administered by JP Morgan and BlackRock, the crooked bank who paid $920 million fine to the Justice Department, the largest fine they ever issued at that point for manipulating the metals market. I mean, what could possibly go wrong there? They are allowing them to be the custodian of the world's largest silver trust and one of the biggest gold trusts in the world. And BlackRock, the military industrial complex, who has kept the price of silver down forever and their banks associated with them in order to sell high-tech weapons and then get the reconstruction projects in places like Ukraine. What could go wrong? And so I think that you're right. The people who would understand what you and I are doing are able to break apart the noise and see metals for what they are right now, rather than following the conventional wisdom and popular narrative that will be with the herd that misses it entirely. And the biggest money in the world, most sophisticated, who the central banks have been buying it hand over fist, and now we're Whoever the hell is doing it here in the United States for the last year, this is the biggest money in North America. Who gets it and knows the information, and they're front running with quiet intentions. Don't tell, don't talk. No one's asking about it. If I were a journalist for ABC or Fox News, I'd be like, who the hell is bringing in all this metal in the COMEX? We need to research it, and I want it on my desk tomorrow and a story in 2 days. Not a word.
Well, I think it was NBC this week that came out with an article talking about the devil's metal, silver.
Yeah, I was going to, and I saw it in Reuters, the devil's metal, kiss my ass, like silver, the devil's metal. I mean, everything they do, they frame it in the most grotesque way. And that's just part of the reason we haven't heard about it, because the companies that control every media outlet in the United States, there's 4 of them. They own everything. And there are shows, if you ever watch, sometimes Fox will do this. Sometimes you see it on podcasts where they will take snippets from every single news outlet in the United States, ABC, CBS, NBC, Fox, CNBC, all of them. And they will all say the exact same phrases and you like talking about the same thing. It's like, right. So we're supposed to believe that you guys are actually figuring this shit out on your own. No, you're being told what to say or what not to say. And you have to, that's why so few people get it and think we're nut jobs, yet we've outperformed everything. Why? Because we're able to see past the noise and do research on our own, independent of the media that's lost every ounce of journalistic integrity it ever once
had. I totally agree. And so I think more and more people are waking up. And, you know, I think we're going to have a ride for the next 5 to 10 years with precious metals. I don't think they're going to fix the system anytime soon. We could have things definitely blow up much quicker, as you've always said, little by little by little, and then all at once. You know, that could happen anytime. I don't know. But if that continues to linger on, oh, there we go.
Yeah, made a painting of that.
I love that.
That's the next tattoo. I got the periodic table here, platinum, palladium, silver, and gold. The next tattoo is going to be little by little, then all at once. And maybe right next to it, what does it all mean anyway? So, you know, the bottom line is that
you got to get a t-shirt with that. You got to get a t-shirt from Miles Franklin, little by little, like that would be awesome. Something similar.
You know what? I think you've just inspired me. I agree.
It would be awesome. I think you'd sell a bunch of them. But anyway, sorry, I kind of cut you off.
No, I mean, the bottom line is that, you know, if you open your eyes and are open to thinking independently rather than being told what to think, and do a little bit of research independent from the mainstream. Follow a guy like Eric Yeung as a good example, or you know, the what's it called, the I forget the name, Kobeissi Letter.
Yes.
You know what I'm talking about on Twitter?
Like that, I think.
I'll tell you right now, because I don't want to be disrespectful to these guys because they're great stuff, you know. And
they have very good stuff. I'm going to just tell you guys in general, if you guys
are the Kobeissi Letter, Kobeissi Letter on Twitter. Follow him and Eric Yeung. Follow Dave Kranzler.
Yeah.
You know, all of these people and lots more. You know, but you'll learn more about what's happening in the world than you will watching NBC and CBS and Fox and CNBC for the next 2 years. You'll learn more in a week by watching these guys, reading their stuff.
You will. And I'm just going to recommend everybody, if you do not have an X account, okay, it used to be Twitter, it's now X, go get one from the standpoint of following gold and silver content creators on there. You can follow Andy, Miles Franklin Media on there. You can follow me. You can follow Eric Yeung. You can also follow Kevin with North Star Bad Charts.
Yeah, he's great.
And also the Kobayashi group. And I'm not saying that exactly right, but I'll put links down below for you guys. But anyway, you can go and look at my profile. You can look at Miles Franklin's. You can see who we're following, and you can go follow those guys. But anyway, there's great charts that come out all the time. There's news that drops very quickly. With Eric, you get information from Shanghai. I don't know anybody else in Shanghai that's giving me information about what's going on with gold and silver. And I'll tell you, they're way ahead of us by years as far as their society understanding what gold and silver is and how to move in position into it. So, Andy, we're getting kind of close to the end here, but I had 2 other quick questions for you. The first one is there any update to anything around BRICS that we should be aware of?
they're progressing very nicely. The M bridge is now operational. We just saw a trade last week between China and UAE. China has internationalized their yuan, their digital yuan, making it immediately convertible into gold, not going into dollars. So if, for example, China buys oil from UAE, they pay for it in digital yuan over the now operational M bridge, which settles in 7 seconds outside of SWIFT intervention at a 98% reduction in fees. Those digital yuan are now immediately convertible into gold. I believe it was France just signed a deal with India again on a cross-border settlement system, not BRICS, but stepping aside from not BRICS, but stepping aside from the SWIFT system. It's been quiet. It has been, but I think that you can see progression being made. China is calling it the internationalization of the yuan, but what they're really doing is setting the foundation for the BRICS. They're expanding the Shanghai vaulting system into multi-jurisdictional vaults. The first one was just completed in Hong Kong. What's significant about that is any gold that leaves China has to leave through Hong Kong. So if Saudi Arabia wants to trade in their digital yuan for gold, well, boom, easily done. Take possession in Hong Kong. The next one is being built in Saudi Arabia, so they can take it right in their own backyard. They are building multi-jurisdictional vaults all throughout the Belt Road to expand the internationalization of the yuan. To me, it is the rails for the BRICS, and they just don't want to antagonize Trump any more than they already have by calling it the BRICS. But it's because of that they're being very tight-lipped about it. Because the BIS pulled out at the 12th hour of M bridge 2 years ago, and now they're doing it without the BIS assistance, rather. It was developed through those countries, China, Hong Kong, Thailand, UAE, and Saudi Arabia, through the BIS Innovation Hub, and pulled out at the 12th hour in an espionage sort of way. And Trump, his aggravation pointed directly at the BRICS. They're not trying to openly antagonizing him, so they're keeping it quiet. But now that we just saw the first successful trade of the bridge system in real life, just a couple of days ago between UAE and China, tells you that they're moving in that direction. I believe India takes the reins for the chairmanship next year, and I would expect to see more countries added to it. It's been relatively quiet, other than to say, I think that you can see very closely that they are making strides of massive de-dollarization and payment rails, which was the goal of Brazil in this last one, to develop and refine payment rails that will allow countries to trade their central bank digital currencies independent of the SWIFT. They came out and said they are bringing BRICS Pay online now, which is B2B or retail. It's like a credit card or an app where someone in Brazil could buy something from China just like that without converting. It does it for you automatically. And that is being rolled out to the entire Belt Road Initiative. Sergei Lavrov came out and said, we're going to open up the M bridge to central banks of every country other than the European Union, Great Britain, and the United States. So they're massively opening up this technology that eliminates the dollar in the SWIFT system, not only to central banks around the world, other than the West, but also the BRICS Pay, which is B2B and retail. All of it, instant settlement, free from the dollar and SWIFT intervention. So that's this is the little by little, the stuff we talk about. But when they flip the switch and as much as 75, 80, 90% of human population has access to a settlement system outside the dollar and using gold in replace of the treasury market to settle imbalances, that's the all-at-once moment. We're not there yet, but it will come, and you can see that they're moving with strength in numbers very quietly to secure this type of system that is gaining momentum rapidly.
I think so too. I can give just a quick anecdote, and then I have my last question for you. I was just in Brazil about 3 weeks back, and I was putting on a conference that I created around artificial intelligence and what we call basically digital marketing. And so I had a panel of people. It was all in Portuguese. So I had my new AirPods on that translate Portuguese to English, which was pretty cool. But we had a panel of a couple big consumer banks in Brazil, as well as one of the Google AI experts on there. And then the company I work for is an AI marketing company. And so we were having a lot of conversation, and all of a sudden I noticed in the translation, everything that was being discussed was about China. It wasn't about the United States, even though I work for a US-based company. And what we're there is helping provide that information. But what people I don't think are really understanding is Brazil's in the middle of an AI kind of battle between China and the United States. And it's not just AI technology, it goes into just about every facet of it. And both countries are trying to figure out how do we kind of, get in there. We're late to the game. China's already been in there, really working a lot stronger. But it was interesting to see the comments coming in and how strongly they were talking about China and all the things that are going on there. So the reason I asked that question too, Andy, is we haven't heard a whole lot recently. It's been kind of quiet. And I just want to be able to help people understand that it hasn't gone away. It's just quiet, which means that, things are being done and they're getting—
The West will mess with them. The BIS is a Western institution. They pulled out at the 12th hour saying we can't be part of any system that allows countries to sidestep Western sanctions. Like they just woke up after 5 years of developing this with China, Hong Kong, Thailand, the UAE, and Saudi Arabia, and realized that Russia is the iron BRICS. I mean, it's just crap. And then, Trump says you buy oil from Russia, 150% tariffs. You want to join the BRICS, 150% tariffs. Those aren't tariffs. Those are sanctions. Yeah. Tariffs are used to protect your manufacturing industry. He's using it as a sanction masquerading as a tariff. So you're right. And that's why they're keeping it quiet. But quiet is sometimes worse than open and loud.
It can be. Okay, so here's my last question for you. A lot of people right now are trying to figure out what the best product is out there to buy. And I wanted to get a sense of what you see coming in and, what you guys are able to, at Miles Franklin, able to offer for the best price. We've heard of a lot of constitutional or junk silver not being bought up by the refineries, and that it's been kind of backlogging in different places. I don't know if that's still out there or not. I know a lot of people have been chasing after gold eagles and gold buffaloes, which seem like the premiums have gone up a bit on those. But, for someone that's, let's say in an accumulation mode, okay, so not necessarily someone that's brand new. I cover a lot of that on my channel. So anybody that wants to hit, how do I get started today? Watch some of the videos on that. You guys can find those in the playlists. But for someone that has been watching you and watching me for the last couple of years here that's looking to accumulate,